cybersecurity, corporate drama, and some really important stories that could shape markets. We start with one of the biggest macro stories right now. The Federal Reserve may be about to enter a completely new chapter. Kevin Warsh is moving closer to becoming the next Fed chair, and markets are paying very close attention because this comes at a very sensitive time. Inflation is heating up, oil is surging, the Middle East remains very unstable, and if the Fed changes direction, that affects everything from stocks to bonds, Bitcoin, crypto, pretty much every major asset. And speaking of oil, America is once again opening the emergency oil reserve. The US is releasing another massive batch of oil after the Strait of Hormuz disruption sent energy prices higher. Now, the big question becomes, is this enough to calm markets, or is this telling us policymakers are much more worried than they want to admit? Then we've got a big crypto policy story. The latest version of the Digital Asset Market Clarity Act is out. So there's over 300 pages, and this could become one of the most important crypto bills that the US has ever worked on. There are major updates around self custody, stablecoins, banks entering crypto, developer protections, but also more surveillance and tighter oversight. So we break down what actually matters and what Bitcoin investors should pay attention to. Then we shift into AI and cybersecurity because honestly, some of these stories are starting to feel straight out of a movie. Google says criminals may have used AI to discover a serious software vulnerability for a planned cyber attack. If true, this could be one of the first real examples of AI helping launch cyber warfare at scale. And on top of that, one of the biggest education cyber attacks in history just ended with a ransom payment. Hundreds of millions of student and teacher records were caught in the middle. So, yes, cybersecurity is becoming a much bigger story these days. We also talk about some corporate chaos because GameStop made a shock attempt to buy eBay, and eBay basically slammed the door shut. This one is getting more personal. And I love a little bit of corporate drama. And of course, crypto and Bitcoin are never too far away from the conversation because at the end of today's show, we've got a very special guest joining us. Someone maybe many of you already know, who is Rob from Digital Asset News. Honestly, he has one of the best crypto YouTube channels out there. It's a real pleasure to have him joining us today. We'll be talking about where Bitcoin could possibly be heading next, how he's thinking about this market, how to approach wealth management in this cycle. So if you care about Bitcoin, crypto, or building wealth over the long term, you definitely want to stay with us until the end of the conversation. So, all right, let's get started because we have a lot to go through. So, we are starting with Kevin Warsh, and this could be one of the biggest macro stories of the week. So, Donald Trump's pick for Federal Reserve, so being Kevin Warsh, just cleared a major hurdle in Washington. So, Kevin Warsh is now one step closer to potentially becoming matters because he is not signaling like more of the change. He's talking about major change. So what happened is that the US Senate has moved Kevin Warsh forward in the confirmation process. That means he's getting much closer to taking one of the most powerful jobs in global finance. And timing wise, could not be bigger because inflation is heating up again, oil is surging, the Middle East remains unstable, and whoever leads the Fed now could shape the US economy for the rest of 2026. And Kevin Warsh is talking about something called the regime change, and this is why investors are watching him very closely. At his confirmation hearing, Kevin Warsh basically said the Fed has lost trust, lost credibility, and needs major change. So let's take a look at this clip right now.
And I mean, one thing that's come up as I've been engaged with different experts is concern about rapid reduction. If you are moving in that speed, that it could generate a number of concerns, including upward pressure on long-term interest rates. So I guess I just wanted to check, do you share that concern? You know, as you are thinking about how to reduce it, do you also understand, though, that there are concerns about rapid reduction in the speed with which you're trying to go down?
Yes, Senator, and that kind of regime change would have to be deliberate, well orchestrated, well choreographed, and well described so that unnecessary upset are not done to financial markets as we go to a policy regime change much more focused on interest rates.
And I mean, one thing that's come up as I've been engaged with
that was some very strong language. Central banks usually speak very carefully. Regime change is not normal wording. That tells you he wants a real reset. Now, if we take a look at the timing, like it's even more interesting because fresh inflation data just came hotter than expected. US inflation reportedly rose 3.8% year over year, puts even more pressure on the Fed because markets have been hoping for easier policy, lower rate, more liquidity, but sticky inflation makes that harder. And the oil situation is still above $100 creates another problem. So higher energy costs would push inflation higher. Transportation gets more expensive. Shipping gets more expensive. Food prices can rise as well. And this becomes an inflation headache fast. So Kevin Warsh could be stepping into a very difficult moment, especially when he's seen as more a supportive of lower rates, also more critical of how large and powerful the Fed has become. That lines up with what Donald Trump has wanted for a while. So he wants a leaner central bank, potentially easier policy, but that is big risk. Is he going to cut too soon for when it comes to the rate? Inflation might get worse. Like, what about if we stay too tight? The growth will slow down. So that is a balancing act. Like this part is really interesting. So there's a clip where Kevin Warsh has spoken about digital assets. When asked about crypto, he said digital assets are already part of the US financial system. And of course, that is a powerful statement. So let's take a look at this clip right now.
That digital assets should be incorporated into our financial industry so Americans have new investment opportunities and consumer protections.
Senator, digital assets are already part of the fabric of our financial services industry in the United States. Yes.
Thanks, Mr. Walsh.
Senator.
Crypto language. That's acknowledgement, and that matters. In the previous interviews, like Kevin Warsh has suggested, Bitcoin can act like a warning signal, a signal that tells you when trust in monetary policy is weakening. That's a very Bitcoin aware way of thinking, if you ask me. He also reportedly does not support a US central bank digital currency. That will make some Bitcoiners very, very happy for sure. So there are two ways of looking at this news. So the bull case is that if Kevin Warsh leads to easier policy, that means lower rates, more liquidity, then it tends to help risk on assets like crypto, like Bitcoin a little bit more. But let's balance that view. Because if inflation stays hot, Kevin Warsh may not actually have much room to cut. And if markets expect easy money but don't get it, that could disappoint investors. Also, like being Bitcoin aware does not mean being pro Bitcoin. Like that is an important difference because let's not forget when it comes to the voting members, it actually consists of 12 different members from the Federal Reserve. So, despite Kevin Warsh might be the chair in the coming time, that doesn't change the game if the inflation stays high. So the final take is this is bigger than one Fed appointment. Like this is about the direction of the US monetary system and increasingly where Bitcoin fits into that bigger picture. Because when like even Fed leadership talks about digital assets very seriously, you know the conversation has changed. All right, so we talked about oil a little bit, but now let's dive into one important update coming from the US. So the US is releasing another massive batch of emergency oil. The reason why is because the global oil market is under some very serious pressure after the war with Iran shut the Strait of Hormuz. And here's the key issue. Even with the emergency action, oil is still surging. So what happened is that the U.S. Department of Energy they announced that they are releasing 53 million barrels of oil from the Strategic Petroleum Reserve. That's America's emergency oil stockpile. The oil will be loaned to energy companies to help ease supply pressure. This is not random move at all. It's part of a much bigger international effort. So, back in March, the US joined a coordinated energy response with more than 30 countries through the International Energy Agency. The goal is to basically flood more oil into the market. That is a total commitment here. So there is 172 million barrels from the US. And global target is roughly 400 million barrels added to supply. And about 35 million barrels have already been released. So now there is another 53 million barrels incoming. So because oil shock is definitely very real, we just took a look at the Brent crude oil as well. So $106 per barrel. Like since late February, crude has jumped roughly 45%. And of course, that is a huge move. And the core problem remains to be the Strait of Hormuz. Like this is one of the most important oil choke points in the world. Huge volumes of Middle Eastern oil normally pass through it every single day, but right now that flow is disrupted. Reports suggest 10 to 12 million barrels per day are still being blocked from normal global markets. So yes, some supply is being rerouted through pipelines, but that is simply not enough. So let's go back to this latest update from the US because let's do a reality check. 53 million barrels. Of course, on the first glance, it sounds huge. And politically, to be fair, it is. But in global oil terms, it disappears fast. World oil demand last year was around 103 million barrels per day. That means this release covers roughly 12 hours of global demand. That's it, literally just half a day. So while the headline sounds very massive, the actual relief might be temporary. But like if this is the first time you're hearing about this like oil reserve, here's some context. Like the Strategic Petroleum Reserve was built around 1970s during the oil crisis. The whole idea is quite simple. If a supply shock hits, America will still have emergency reserves. It's basically the national insurance policy. But here's what matters now. That insurance policies is being used aggressively and the supply problem still isn't solved. Because like this actually tell us policymakers are very worried. Like you don't tap into the emergency reserves like this unless the situation is serious. And if oil stays elevated, that feeds directly into inflation, and consumers would of course feel it really fast. And you'd be asking, like, why would a Bitcoiner care about this news? Well, that's because oil shocks change macro, and macro changes liquidity. If inflation rises again because of energy, central banks may struggle to cut rates. We just covered that about Kevin Warsh. Like that would affect stocks, that would affect crypto, and also Bitcoin. So yes, this is an oil story, but it quickly becomes a monetary policy story as well. So the final take is like the US is throwing emergency oil at the problem, but the bigger issue remains that the Strait of Hormuz is still shut, supply is still constrained, and emergency reserves are not infinite. Because if you're using your emergency stockpile and the emergency keeps going, that becomes a very different story. All right, so we'll take a short break from here. When we come back, we are diving into more corporate drama. This time is very interesting. So, GameStop is trying to buy eBay, but they got rejected really hard. So, very dramatic, very interesting, and in my opinion, is a funny story as well. So, do stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Welcome back to Roxham TV, and thanks for sticking around with us after the break. We are now diving into some really interesting corporate drama. So, GameStop tried to buy eBay in a shock takeover move, and eBay basically said, absolutely not. Not just no, but not credible. And of course, that's strong language. So, what happened is that eBay's board has officially rejected GameStop's takeover offer. So the bid was roughly $56 billion. GameStop CEO Ryan Cohen offered about $125 per share using a mix of cash and stock. So if we take a look at how much is eBay worth right now, it's actually not a too bad of an offer because offering $125 right now is worth only $110. But eBay's board says the offer simply does not make sense. And then exact message is that the bid is neither credible nor attractive. That's corporate language. Well, we don't believe you can actually pull this off. And this was already quite obvious because GameStop is worth roughly $12 billion, while eBay is worth closer to $46 billion. So that's 3x larger. So immediately investors ask, where is this money coming from? GameStop reportedly lined up $20 billion in financing, but even with that, markets were not convinced. Merger traders largely did not believe this deal would close, and when smart money doesn't buy the story, that tells you something. So when it comes to eBay, the reason why they said no, they lay out multiple reasons. So the simple version is this: like they believe they are better off alone. They questioned the financing. They worry about the debt risk. They worry about operational problems in combining the businesses. And of course, they question the valuation. And interestingly, they also took a shot at GameStop's governance and executive incentives. And that's a pretty direct jab, if you ask me. And this is also where it gets personal and it gets very messy. Last week, eBay suspended Ryan Cohen's the marketplace account. Ryan Cohen's accused eBay of retaliating against him using their own platform. So now, this is not just a finance story. It's becoming very personal. It's becoming a personal corporate warfare. But if you ask, I think this still looks really odd, even at the beginning. It's like, why would they target eBay so specifically? GameStop has been trying to basically reinvent itself for years, from a physical game retail to digital transformation to meme stock legend. Now suddenly they want to buy eBay. That is, and big acquisitions like this are risky, even for strong companies. GameStop is not exactly viewed as stable blue chip acquiring material. And well, looks like I'm not alone. Like even Michael Berry jumped in. Yes, he is the big shot guy. He posted that this situation has basically gone so hostile. And honestly, that feels accurate because Ryan Cohen had already hinted if rejected, he might push for a proxy fight, meaning try to influence eBay directly. That could turn this into a much bigger battle. And for eBay's defense, the argument is quite simple. Like the company said its marketplace is gaining momentum, and the key numbers like nearly $80 billion in gross merchandise volume. So from that perspective, why sell to a smaller, more volatile company with financing questions? I would say that's just logic. So the final take right now, this looks like a hard rejection, but the big question is whether Ryan Cohen walks away or escalates from here. Because if he goes very hostile, this corporate drama may just be getting started. And obviously, I'm excited to see where this goes. All right, so let's move on to some AI news right now. And this is one of those stories that sounds like science fiction, but it's very real. Google says criminal may have used AI to discover a brand new software vulnerability, and not just for testing, for an actual planned cyber attack. If confirmed, this could be the first real-world case of AI helping attackers find and weaponize a previously unknown software flaw. That is a major moment. So what just happened? The article from Google's threat intelligence team that found evidence that criminals used an AI model to generate exploit code. In simple terms, it means that AI might have helped attackers discover a weakness in software that nobody even knew existed before. That kind of flaw is called a zero-day vulnerability, meaning defenders have 0 days to prepare because the weakness is unknown. That's why 0 days are dangerous. And according to Google, the attackers were planning a large-scale exploitation campaign, meaning this wasn't just some experiment. It wasn't a random hacker playing around at all. This was reportedly intended for mass attack. Google says it worked with the software vendor quietly to patch the flaw before it could be used. So in this case, the attack might have been stopped, but the bigger story here is what this means. For a long time, many cybersecurity experts believed AI wasn't quite there yet. And yes, like AI could help with phishing emails, social engineering, writing malware snippets, or automation, but finding serious zero-day vulnerabilities on its own, that was seen as harder, maybe still like a year or two away. But that assumption might have changed, and that's why it's making real headlines today. And this is where it gets like everyone's so worried. Like, think of cybersecurity like a lock and key game. Like hackers try to find weakness, defenders try to patch them first. Now, imagine hackers having an AI assistant that can scan huge amounts of code much faster than humans, looking for weaknesses, testing attack paths, trying or writing exploit code. That changes the speed of the game very massively. So this report from Google also flagged activity linked to North Korea, not surprised there, but also Russia and China. That means this is not just a cybercrime issue, this is a national security issue as well, because if criminal groups are experimenting with AI cyber attacks, state-backed groups almost certainly are too. And they usually have much bigger budgets, more resources, and a lot more patience. So this is why this time feels different. Traditional hacking takes time and many skilled human operators, and AI changes that game. It changes the scale and also the cost. More attackers can become dangerous very fast, and that's the scary part because every public website, think about it, every SaaS platform, every financial app could now face a much smarter category of attacker. And this isn't just a tech company problem anymore. Think about it like what runs online. We have banking, hospitals, airlines, payment systems, government websites, crypto exchanges, like everything depends on software, and software always has bugs. The difference now is that attackers may be getting much better tools. So, what I'm trying to say after reading this article is that we are entering a new battleground, which is AI versus AI, because defenders are also using AI. Google is using AI, Microsoft as well, cybersecurity firms as well. So, what we may be entering, I would say, is an AI versus AI security war. Machines fighting machines, and humans are just like supervising the battlefield. That sounds very dramatic, but honestly, this is where we're heading right now. So the final take is like Google might have stopped this attack. Of course, that's good news. But the bigger news is that the cyber battlefield may have been permanently changed because once AI helps discover one real exploit, it probably won't just stop it there. And if AI lowers the cost of cyber attacks, the internet just become a much riskier place. All right, so we'll take a short break from now, and then when we come back, we are getting into more cybersecurity story, more cyber attack, and this time, the next one we're covering is huge because we are talking about the world's biggest educational software platforms, just as hackers. So it's basically a perfect transition after covering the AI news and being the attacker online. So do stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Welcome back to Roxham TV, and thanks for sticking around with us after the break. We now have a huge cybersecurity story. One of the world's biggest educational software platforms just paid hackers, and the scale here is massive. We are talking about data linked to roughly 275 million students, teachers, and staff. That could make this the largest education sector cyber attack on record. So what happened is that in Structure, the company behind Canvas, said it paid an undisclosed ransom to the hacking group Shiny Hunters. So the reason is that hackers allegedly stole a massive amount of sensitive data and threatened to leak it publicly. The deadline was Tuesday. The company struck a deal just before that headline. So, according to Instructure, the hackers returned the compromised data and provided digital proof, what they call shrouded logs, suggesting the stolen files were deleted. But even the company admitted something very important is that there is never a full certainty when dealing with cyber criminals, and that's the key point. If you've ever been to university, chances are you have used Canvas. And this is like one of the most widely used education platforms in the world. Students use it for assignments, teachers use it to communicate, schools use it to manage learning systems. So this is not just some niche platform. Canvas reportedly serves around 41% of North American higher education institutions. So that includes major universities like Harvard, Princeton, Columbia. So this was a hit on major education infrastructure. So hackers reportedly threatened to leak 3.6 terabytes of data. That includes private records, reportedly billions of messages between students and teachers. So think about like how sensitive that is. We are talking about private conversations, academic communication, institutional records, and potentially some personal details. This goes way beyond just simple email leaks. And this is the ugly truth, the ugly reality of ransomware. When attackers already have your data and threaten some public exposure, companies often face a brutal choice. So whether they pay and hope the damage is contained, or they refuse and risk a massive public leak. And that's the business model. And unfortunately, it keeps working. So the bigger issue here is that the lesson here is Canvas sits at the center of millions of lives. One vendor, one platform, one breach, but huge consequences. And that's the hidden risk of centralized digital infrastructure. Schools rely on one provider. Businesses rely on one cloud vendor. Hospitals sometimes just rely on one software stack. So one weak point can create massive fallout. And honestly, this problem is not getting better. Cyber attacks are becoming more organized, more sophisticated, and now with AI may make attacks even easier to scale. And this is becoming a very serious modern infrastructure problem. And once attackers know companies will pay, that creates a very dangerous incentive for the next one. All right, so let's shift gears a little bit and let's come back to crypto because that is a big moment for crypto. The US Senate has released the latest draft of the Digital Asset Market Clarity Act. And if this becomes law, it could reshape how crypto operates in America. So whether it's exchanges, banks, stablecoins, self-custody, DeFi, and even Bitcoin infrastructure. So there's a lot inside this bill. So lawmakers just released the updated version of the Clarity Act ahead of a key Senate vote. So this version is very massive. So as you can see, this PDF is 309 pages long. That's bigger than the earlier version. And lawmakers now have a short window to propose changes before the next step. So this is moving, in other words speaking. The main goal for this bill is to create actual rules for crypto in the US because right now the industry has been dealing with uncertainty for years, like basically who regulates what? Is it SEC or CFTC? What counts as securities? What doesn't? So this bill's try to answer all of that. The broad structure looks like this. So the SEC would handle token fundraising and issuance, while CFTC handle much of the trading market. That split has been one of the biggest debates in crypto for years because like companies want certainty, otherwise they don't know where to move. Now, this is the section like many Bitcoiners are focused on. The bill says federal agencies cannot block people from holding their own crypto in self-custody wallet. And of course, that's huge because self-custody is one of crypto's core principles. Not your keys, not your coins. If that protection stays in the final bill, that is a major win. And other important section protects developers. So people building blockchain software, whether it's wallet tools, node infrastructure, open source code. So this bill sets these people, so developers should not automatically be treated like money transmitters. And that matters a lot because developers have worried for years about being regulated just for writing code. And this could reduce that fear fast. Another part that is very important, the bill would allow banks to do much more in crypto, so including custody digital assets, help clients trade crypto, issue crypto-backed loans, run blockchain nodes, provide wallet services, and of course, that is a major institutional shift because once banks get clear permission, TradFi moves in faster. Now, of course, we have to talk about stablecoins because it's one of the biggest battlegrounds. The bill also blocked platforms from paying bank-style interest just for holding payment stablecoins. So no simple park your stablecoins and earn that yield model like a saving account, but there is an important distinction. So the bill still allows rewards tied to actual activity. So things like transactions, providing liquidity, staking, governance, loyalty rewards. So that is a huge difference. As of passive yield, that is more restricted. And activity-based crypto participation would still be allowed. Now, let's not pretend this is all bullish because the bill also expands oversight. More anti-money laundering rules, more sanctions enforcement, more monitoring, and more studies around self-hosted wallets, mixers, DeFi protocols, offshore stablecoins. So yes, crypto gets clearer rules, but also more government oversight, and that happened to be the trade-off. So this is like final take. This is one of the most important crypto policy developments in years because for the first time, the US might be moving toward an actual crypto rulebook. So it's not perfect, it's not like pro-crypto, but clearer. And as for Bitcoin specifically, self-custody protections and infrastructure protections are very meaningful. So the bigger question here we are asking, like how much survives before this becomes law? All right, so that is the latest update on Clarity Act. We will take a short break from now, but like when we come back, we've got a very special guest joining us today. So Rob from Digital Asset News, being one of the most respected voices in crypto, and honestly, someone I personally watch myself as well. We'll be talking about Bitcoin, where he thinks the market could be heading in 2026, and some valuable thoughts on wealth management in this cycle. So do you stay with us? We'll be right back.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Chances are you've come across digital asset news. It's honestly one of the best crypto YouTube channels out there for breaking down the markets. In a way, I would say it's clear, balanced, and actually useful. And I'll be honest, like I personally watch the channel regularly myself, so I'm genuinely an honor to have today's guest with us. So joining us today is Rob from Digital Asset News. We are going to dive into everything happening in the markets right now. So whether it's Bitcoin, macro, institutional adoption, where the cycle could be heading. And of course, the big question everyone wants an answer, like where does Rob think Bitcoin is going in 2026? So Rob, welcome to Roxham TV. It's great to finally have you on the show. How are you feeling today?
Feeling pretty good. Thanks for having me. This is a nice, refreshing change of pace from the last interview that we had, which was a complete scam, as as people took over your account and got me into a fake StreamYard account. And we did like almost a real interview, but it was just them trying to gain access to my computer. So this is nice. Thanks for having me on.
Yeah, I can't believe this is your first time on Roxham TV because, like, the previous few times I was on your channel, and last time it was a very interesting incident because, like, if you guys didn't know, for viewers out there, just some context, because, like, half a year ago, around that time, I got my X account hacked. And end up the hacker was sending out all these messages to the people I know, pretending to be me. And what he did is that basically copy and paste what I do on the captions, maybe on my Instagram accounts, and still pretending to be me. And end up some of the DMs that the hacker sent out, it was Rob. And very luckily, Rob noticed it was a scam and managed to call him out. And finally, by the way, after half a year, X took down the account. So thank God. And thank you so much, Rob, for the effort, because I know you talk about that quite a few times on your channel as well. So I really, really appreciate your help out there.
You're welcome. Yeah, and it's pretty sad that it took X that amount of time to take that account down, because it wasn't just me. It was everybody else that they were reaching out to. And when I got into that account, there was a real person. It was some person who said, like, "Hey, I'm the manager for Jimmy. We're just going to go through some checks and balances and take a look at your account and your settings." And I was like, "Nope, that's not going to happen. So, thanks for playing, and I'll see you later." And that was it. But another person that could be reached out to, they're susceptible to it, and I blame X for that. And but yeah, that's in the past. So glad to be here. We'll talk about what's going on in the market today.
Yeah, so let's talk about Bitcoin. And of course, like Bitcoin is kind of going nowhere. I kind of need to pick your brain about your personal take or perspectives on the market. Because, like, not gonna lie, like me and you, we both have been in crypto for a quite few years. So you got in earlier than me. So I believe 2017. I actually got in 2021. So like, but what I'm feeling right now is, not gonna lie, I'm feeling a little bit salty because, like, back in the days, we saw the crypto insane gains, like 50x. I could just close my eyes and then pick up a token and do like 50x. But right now, stocks are ripping it. Like stocks are having a really good day. Even S&P 500 is breaking new all-time high yesterday, or even could be right now as we speak. So, what's your take on that? Like, your stocks? Are you into stocks or generally just crypto?
Well, first, that's a good question. It's a loaded question. So let's rewind to 2017. When I got in, I had actually been approached by my son, who said, "Hey, I'm selling." There's a kid at school who's selling 500 Bitcoins for $500, and I was like, "Great! What the hell is a Bitcoin?" And when you first start to explain it, people, like, well, it's decentralized, this great thing. I'm like, Alan, it makes no sense. Someone's going to pass on that. And that was, 2012, 2013. Now, fast forward 2017, when I go, hey, that was $1 for a Bitcoin and now it's 5,000. That's crazy. Maybe I should get into this. So I got into it at that point, and you saw it for like Bitcoin was coming into its own, but there was altcoins that were coming in. And then people didn't realize, because when I got in, it was almost sacrilegious to get it out of Bitcoin and get into altcoins. But I thought, I think Ethereum could do pretty well. I think Cardano could do pretty well, and all the
You're
different
not
ones
wrong,
out
though.
there, Chainlink. Yeah, and it worked out pretty well. Now, fast forward 2021, it was the same thing again, but on steroids. And that's when a lot of more people got into it. And it was, you could have, put a blindfold on and thrown a dart, and you could have made a boatload of money. And a lot of people did. Unfortunately, a lot of people made a lot of money, but they round trip their bags because diamond hands, stick around, never sell. And that was the worst type of advice you could possibly have gotten. I mean, heck, even Michael Saylor just yesterday said, yeah, I did say that, we shouldn't be selling our Bitcoin, but what I was really talking about was a net zero seller. And that's not what we're doing on MicroStrategy. So they're talking about selling finally, as they should have. And people just realized that, hey, this, you have to actually do these things. So moving forward in 2025, 2026, I can feel the jadedness of people who were like, hey, this was supposed to go up massively. What happened to the rotation from Bitcoin into large cap alts and then to small cap alts? And then what about my meme coins? And now the reality comes in. And the reality is that the utility for 99.9% of these altcoins, it doesn't exist. And this all really came down to people just speculating and just thinking, okay, I'm just going to buy into this and it'll go up, and I'll sell and dump on people. And that's pretty much how it is. And that's not how it works. In business, you can speculate, and it worked pretty well in the past. Now you have to do real homework and real due diligence to find out the actual utility that is out there. So for me, when I look at this personally, I look at Bitcoin and say, okay, as long as the government keeps printing money, and it doesn't matter what government country you're talking about, it doesn't matter if we're talking about America or Canada or EU or China, they're going to keep printing money and debasing the currency. And because of that, that's why I believe in Bitcoin. Now, for the altcoins, I take a look at, and I'm an American, and I see things through an American red, white, and blue flag of what's going on, and payments. And for payments, I think it's a bigger deal outside of America per se, but people can make an argument. When I look at payments, USDC and Tether, which is the largest stable coin, roughly taking up 94% of all the volume, you have to take a look at the rails that are being used. And the rails that are being used are the best. And that is Base, Binance, E, Ethereum, S, Solana, and T for Tron. So you take a look at those rails, and it's not just me doing this data. Just take a look at Visa on chainanalytics.com. And it's a website that Visa tracks the most amount of transactions that are being done and which rails those are, which blockchains. And it's the same thing, and it's been the same thing for like a year. It's Base, Binance, Ethereum, Solana, and Tron. Now, there's other winners out there, but I think if you take a look at like real world utility, what's being actually done, I think that's something to really pay attention to. And the other stuff, like the meme coins and metaverse and NFTs and stuff like that, sorry, it just doesn't work like that anymore.
No, certainly not. I wish I saw the hype back in 2025, basically the same narrative that I saw back in 2021. But ultimately, we did not get that. Like you mentioned, we are more moving to almost like a transition. Right now, we're focusing on actual use cases, like the example you gave out, maybe stable coins, really tackling the payment system. But there are certain, basically, when it comes to certain use cases, for example, stablecoins, is there a way for retailers to get into the stablecoin action? Would you recommend, I don't know, buying the Circle stocks, or basically what's the strategy? Because we know, okay, a stablecoin is going to be a big use case, but how can average person, everyday Joe get into that action as well?
Yeah, it's a good question because you can do it by proxy. And because some people who just say, you know what, I don't want to touch anything that has to do with crypto or digital assets. Like we were just talking about before we got on about the Web3 conference that you guys had and the debacle that it was and the things that were going on, which gives us a really poor lighting as far as like our industry. So yeah, if you wanted to take a look at it and say, okay, what could I possibly get into? Circle wouldn't be a bad idea. And it's because Circle right now, which is the company that produces the stablecoin that is USDC, Jeremy Allaire is the CEO, and they also have a nice little partnership with Coinbase. If you're in America, actually a lot of places using Coinbase, you'll notice that USDC is everywhere, and they offer you a nice little piece of yield, and things go out pretty well. And then also you'll notice that Tether isn't much as a factor, even though globally it is more of a factor. It's because in America, Coinbase and Brian Armstrong have a nice little deal with Jeremy Allaire and Circle. So if you want to buy stocks like that for Circle, sure, you can go right ahead and move into that one. And then, of course, there's also tokenization of assets that are being done right now by BlackRock, and they're partnering up with Circle as well. So I think if you want to do something by proxy like that and not touch anything that has to do with it, maybe Circle, maybe Coin, which would be Coinbase. And there's a hefty amount of other ones out there. But yeah, if you want to do something like that, sure, why not?
Yeah, so speaking of stocks, because like back in the days, I was just 100% crypto, especially 2021. Like, why bother even looking the stock, right? But one of the best decisions that I made during my trading journey or investing journey is that I got into stocks back in 2023. So I bought the good assets, like you mentioned, Coinbase being one of them. And I really like Coinbase, not gonna lie, because like they have the really tight relationship with USDC, like you mentioned a little bit earlier as well. So Coinbase is actually taking a huge chunk of that fees from USDC, and USDC is basically is growing at a really rapid pace. I would say like USDT is almost like dominating Asia, while USDC is dominating America, at least from what I heard. I'm not sure if you agree with that statement or not.
Yeah, I do because like everybody that I deal with outside of the United States is asking like if I'm doing any kind of payments, it's always the same thing. Tether on Tron. And for 2 years, I was like, who the heck uses Tron? This makes because I'm in America. And I'm like, Tron and Justin Sun, this doesn't make any sense. And then when I would see it, that it would grow. And then if you take a look actually at the price appreciation of Tron, just take a look over the last year. Tron has grown, I think, roughly 28 to 30% over 1 year. Now take a look at Bitcoin, which is, of course, we talk about how great it is in the king. You can see it's actually on a decline as of 13 to 15% over 365 days. So just by that alone, I was like, there's something going on with Tron. And I know people would say, well, Justin Sun and so on. Who cares? It works and people accept it and it's adoption. And sometimes that's just how it really works out with payments and businesses and everything else. So yeah, well, that's the way that I see things. But if I'm doing anything here locally in the States, it's a USDC type of thing. And then if we're doing things through Coinbase, then we just use Base. And of course, you can't do anything with that because that's owned by Brian Armstrong. I think he's got his own blockchain underneath his bed or something. It's not very decentralized, but that's just how it works.
Yeah, so like, well, now I'm very curious, what's your portfolio like? Is it like mostly still in crypto or is scatter around diversify into different financial products as well? I don't know, like real estate or stocks. What is the percentage like?
So on my show, I have these rules. And the very last rule is take profits. And I put those rules in there from 2022 after we saw the collapse of FTX, Voyager, Celsius, BlockFi. And then, of course, we saw projects like Luna just totally implode. So the take profit narrative is what I tried to practice. And I have to tell you, I didn't do as good of a job as I should have. I took profits along the way and it worked out pretty well. And I talk about these profits as like, well, people say, well, you took profits, so what do you do with that? Because now you're into the dollar, which is a melting ice cube. So you talk about debasing the currency, so why you do that? So what we usually do is that we sell crypto and we take our profits along the way and we wait for opportunities. But usually what I do in my portfolio is vastly on one side, which is real estate. I've been in real estate for 2 decades. It works out pretty well for long-term, medium-term, and short-term rentals. So Airbnb and VRBO and stuff like that. So for us, as far as like for a nice revenue stream, it works out pretty well just doing owning houses, apartments, condos. And then of course you have that nice little flow. So you don't have to like, be bogged down by a soul-sucking 9 to 5 job that you hate to go to. So you can do stuff like that. And then of course, as the price starts to go down with crypto, then you start to like, this is the first time where I realized that any altcoin is not going to make it. So we take the funds that we have from the revenue and say, okay, which one of these altcoins is the best business that we can possibly get in? And that's why we talk about the best constantly on the channel. Base, Binance, Ethereum, Solana, Tron. Also for payments, you can take a look at XRP. And also for, tokenization of assets, something like Ondo. And Chainlink, as Ondo is backed by BlackRock with their 14 trillion assets under management. So my portfolio, to get back to your original question, is mostly land and real estate. And then it goes into more crypto. And there's some stocks that I've done and played around with, but mostly it's like Mag 7 type stuff. And the things that I think are going to do well, which is AI. And that would be the NVIDIA and the Teslas and things like that.
Yeah, I really like that portfolio, that breakdown. Especially like, well, for real estate, like okay, you mentioned 20 years ago. So, I'm curious, like, since like real estate is doing so well, why the change of heart? Because like right now you own I would say one of the biggest and the best crypto YouTube channel out there, and the whole channel, the whole narrative focus on crypto. Is there a reason why you would choose to do YouTube content in crypto rather than real estate instead?
Because it's fun. That's why. It's fun and it's entertaining. And like when I started the channel in 2019, nobody wanted to hear about, hey, let's talk about check-in and check-out processes for Airbnb, and also, the different segments that you can set up for emails and also for collecting payments. That's boring stuff. So on that side, it wasn't that big of a deal. And there wasn't that much upside with real estate. You have to understand with real estate, and people will tell you, like, why would anybody get into real estate when the appreciating value of the property itself isn't that big of a deal? Why wouldn't you just put everything into Bitcoin? It's because at times like this, when there is a slowdown, there is a massive reduction in the valuation of the hardest asset on the planet. And also it's good for tax-related purposes. There's a depreciating asset that you have, or as far as like for taxes, and you can use those in your capital gains tax. I don't know if anybody has to pay those out there who are watching the video, but it's something that you can actually do. Also, here in the States, there is a new provision in a law that you can roll over the gains that you have for your crypto and digital assets, and you can put those into property valuations that you're buying. So instead of you saying, okay, now I got to pay the government 20%, 25%, or whatever else it is, the profits that you have, you can roll that into purchasing property, which will at some point appreciate. And if you use it the right way, such as like long-term, short-term, medium-term rentals, you can have a nice positive cash flow, and you can offset the problems that you have with paying taxes. Which let me tell you, no one likes to pay taxes. So if we do something like that, that's pretty much how I feel like with real estate. It's boring, it's stable, essentially, and you have a nice little revenue stream. Now with crypto, I still think there's more upside potential to Bitcoin. I still think there's more upside potential to specific altcoins. But for me to do a channel on real estate is not my forte. There's a ton of other channels like that.
Well, I mean, I'm learning a lot from the conversation because that was some high level play around the whole capital gain tax and the whole basically put the gain from crypto roll back to real estate. I'm learning a lot from this conversation, but I kind of want to go back to the content side of things. So, because right now, You and I, have been in YouTube, like crypto YouTube, for quite some years. I actually got into crypto because of YouTube. Like I initially got in as a crypto YouTuber, but right now, since the retail kind of not really here, the traction. I'm not sure about your channel, but at least for my channel, I'm not getting the views that I used to. Like I feel like people are not searching the basically the SEO keywords as easily back in 2021. I'm not sure if you're feeling the same way. Like, if so, if there's any advice you could give to other content creator in the crypto field.
Well, yeah, this is the same things happened to me. Again, the hot sector in 2017 to 2021 seemed to be crypto. And then there's like a new narrative that kind of came in around 2023, 2024, which is AI. So that's going to dominate pretty much everything moving forward. You can see YouTube channels right now that are focusing on AI. And there's even some crypto YouTubers that have totally transferred over to either a new channel or the same channel just talk about AI, which is fine. Because, I mean, look, it's not like you have to stick around. I mean, look at Marathon, the Bitcoin mining company. They've been around since actually 2009, and they were in it for, it was not pharmaceuticals, it was diagnostic testing. That was their company. Then in 2017, they came over to Bitcoin and said, okay, now we're going to do Bitcoin mining. And now 2025, 2026, they also pivoted and said, hey, you know what? These operations that we have going on for Bitcoin mining, we're going to use these data centers for artificial intelligence and for compute power. So there's nothing wrong with pivoting a little bit, you know, here and there. But what I've seen is this, the advice I have is when you're doing these shows, these live streams like you do, Jemmy, or like just basic shows over time, is that it's good when you have your base of people who are here, because the ones who are here in the bear market are the ones that are probably going to make it during the bull market. It's very difficult to stick around the bear because this is where all the money's made. It's dollar cost averaging as the price goes down, and the ones that don't want to do it, the fair weather friends, they're already gone. I actually appreciate these days because I'm doing a live stream. I don't get the most ridiculous questions from the tourists who are just stopping in for crypto. And then, of course, I get called a boomer and an idiot when I'm talking about maybe you should, you know, buy a little bit more Bitcoin and stay away from altcoins, because when the tourists are here, they know everything. And then when they leave because they got burned because they didn't listen, then of course you got the people who are stable, who know what to diversify in and to stay the course. So for those people, rally around those people because those are your base and those are the ones you want to stick around with. I personally appreciate them because I can't stand sometimes some of the tourists. And that would be my advice for everybody who's out there doing YouTube videos and things like that. Embrace the ones that got you here. That's it.
Yeah, I really like that. Especially like you and I, we have been through some cycles. You have been in the crypto journey longer than I have, so you have seen the ups and downs. But like one thing I feel like people always take away the credit is that okay, we have to actually hold on to that Bitcoin without selling. And during that time, maybe for a few years, and a lot could happen, like a lot of thought during that journey, but yet we still chose to stay around, like paying attention to the news, sticking around and see what's going on in the market and doing analysis every single day. So like people outsiders, I feel like they're not giving enough credits for the hodlers or the Bitcoin maxi, or basically for people who have been through a few cycles in crypto and still choose and still see the use cases why they are sticking around. So that is just what I want to add on there. But like not only YouTube, I'm sensing because YouTube is, I would say the algorithm is a lot more fair. Like if people search for keywords, then you get the get the video. Though the ranking sometimes is a little bit funny. But like another platform I'm having issue with personally, I mentioned a little bit earlier in the stream, which is X. But like this time, I would say the algorithm for X It changes a lot, especially for me. It's going to be difficult because like my account got hacked. So basically, I have to grow my account from zero. I'm sensing how the algorithm being so unfavorable to crypto topics these days. So I'm not sure if you're sensing the traffic change after the whole algorithm change for X as well.
Yeah, well, two things. First of all, I have to correct myself. When I was talking about Mara, the Bitcoin mining operator, it was Riot. I always get those two confused. So sorry, Riot was the one who pivoted from the business they were in to Bitcoin, now into AI. But I think also Mara did the same thing. But to answer your question about X and how things have been a little bit shaky for the for CT or crypto Twitter, it's because there is the head of product, Nikita Beer. He is also a consultant for Solana. And he put out a tweet a couple weeks ago. And it said that as X was rolling out new features for the app, one of the big features was to snooze specific sectors of Twitter. And you could pick from everything from politics to sports to finance. And there was one called crypto. And out of all those ones, like right here in America, we have like a toxicity that's going on with politics, especially as the midterm elections approach. And I would think that that would be the number one thing that was snoozed. And when you hit the snooze button, for like 24 hours, 48 hours, I forgot what it is, you don't see anything from that sector. But it wasn't. The number one sector was crypto. More people choose to snooze crypto than any other topic that was on Twitter. And why is that? It's because people are getting sick of being rug pulled. People are sick of investing into a product that think is going to go great. And then there's insiders that screw them over. And to also talk about it here in the United States is that they are sick of the current administration getting and weaving themselves into digital assets and crypto and rug pulling their investors. Just ask Justin Sun, because it happened to him with World Liberty Financial. So I think people are tired of it and they want to see some real actual utility. Show me what it does, show me how I can use it, and show me how it's going to change the world. Because right now, the things that I see is meme coins that don't do anything, is layer one, layer twos that are falling off a cliff, and there are everything else under the sun that just don't do a damn thing. So we need to put up or shut up and show them actually that this actually has utility and legs. And right now we're not doing that. And there's a very few that are doing it.
Well, that being said, because like it sounds like growing your crypto experience on maybe not just YouTube but on X as well becomes so difficult. Like for new maybe X content creator joining the platform, would you advise them is a good idea to spend more time on X or maybe other platforms you recommend?
Yeah. So right now it kind of sucks for crypto. Let's just be honest. Nikita and Elon Musk did a pretty good job of kind of tampering things down. However, it's the same thing with
A very good job, I would say.
yeah, very great job. It's just like what we see with YouTube. Like right now, there is a base of your people that still believe in it, and they still know that there is functioning, right? We still know that we need Bitcoin so we don't debase the currency and we have something that is finite and something that has you can use for transactions and just the different parts of money. And we also know that payments are going to do a pretty big thing. And as far as like for yield and money market accounts, this would be the next thing. And also tokenization of real world assets. We know it's going to work out. It's just going to take some time. So what I would say for people who are like, what platform should I use? I mean, X is still going to be around and you're still going to have your base. But if you want to do something else outside of that, YouTube is I always feel like it's a great location if you want to really get your message out. If not, there's a great other ones that aren't suppressing X and Twitter and stuff like that, which would be like TikTok, like Instagram, and things like that. But for right now, don't forget your base because they're going to be your biggest supporters as you move forward. So don't just cut out one just to go to other one. It's not bad, not hard to put your content on all these different platforms and just see which actually works.
Yeah, so speaking of putting the content to different platforms, I have tried. So I'm really keen on doing the basically the portrait format, really fast-paced video. So what I do is that basically I will post the same video on Instagram, YouTube, and also on X as well. Some very interesting dynamic is that YouTube, of course, I will get the most view. Most view rate, and then the second one would be Instagram. And my Instagram account is not even big, but X is, of course, coming at number three. I will get like less than 100, sometimes like hovering around 50 view rates for X. So that's why I'm getting a little bit frustrating, I'm not gonna lie, with X. But like you mentioned, since we have the video, I mean, I posted the video already, so it doesn't take like a too much effort to post basically on a separate platform on X as well, right?
Right. And then like, I mean, it's all about the format, right? With YouTube, we're gonna go wide format, and that's fine. But there's a lot more people that actually use it in the portrait. So that's why I use StreamYard. So like you can stream both. And then people who come in for like for me, for my viewers, if you take a look at the analytics, it'll tell you like right now, I saw this yesterday because I was talking to somebody else about it. 54% of all my audience is using mobile media. So that means with StreamYard, I can stream to like widescreen, like whatever people are seeing now, or in portrait, and it just picks up and chooses the right one. And also what's great about that, if you actually have it in portrait, then you can crop it and then stick it over to Instagram or TikTok. And it's the same type of thing. Now, obviously, we do live streams, so an hour on TikTok ain't happening. But of course, that's where you get your assistant to break up everything and put them in sequential order for a couple of clips, and that's it.
Yeah, that makes sense. That is a really good tips for a lot of content creator out there, especially if they're trying to do content in crypto or maybe AI, like you mentioned. But I kind of want to shift gears and talk about Bitcoin right now, because you and I, we have something agreed upon, which is the 4 year cycle. You and I both are strong believer when it comes to a 4 year Bitcoin cycle. But I also noticed since you do a lot of live streams, lots of different video content with other content creators as well. There is a strong debate when it comes to the 4 year cycle for some reason. Like a bunch of people think the cycle is basically dead. There's no 4 year cycle. It's just like a BS. So after hearing all the arguments from different professionals out there, I wonder, like, why do you still stick to believe that the 4 year cycle is still valid, and like, what do you learn from the argument out there?
Well, I mean, it makes sense, doesn't it? That things shouldn't repeat like they do every 4 years. It makes no sense, especially if you take a look at all the noise that is going on. Especially if you take a look at, well, there's a war here, there's a recession here, there's a yen carry trade over this way. And then, of course, like, does it really make a difference as far as like a Bitcoin halving when we went from 25 every 10 minutes for a block to 12.5? Yeah, that makes a big difference. And now we're down in the threes or ones or whatever it is. I always forget. So like for every 10 minutes for the block, does it really make that much of a difference? No, it really doesn't. However, it's a funny thing just how these cycles actually work. And there are some slight changes. One of those slight changes would be that Bitcoin has never reached its all-time high from its previous cycle before halving. It was always halving and then it would take off. Well, that's not what happened this last cycle. This last cycle, we had it on April 20th, 2024. It was actually our all-time high for the previous cycle, went above 67,000. So in that situation, you're like, see, the 4 year cycles are dead. Well, on that case, it actually is. But unfortunately, it's the same thing. We have a halving, and that could be 2012 from the very first one. A year later, we have all-time highs. And a year after that, 2014, actually it bled in 2015, we have massive, massive lows. And then we fast forward to 2016, we had a halving. And then 2017, massive, massive highs. That's when I got into it. And then 2018, just huge, huge lows over a year. And then 2020, halving. 2021, all-time highs. 2022, just a destruction of implosion. Blockchain just took a big dive. We saw it with FTX, Voyager, Celsius, Luna in 2022. And then what happened this time, 2024? You got the whole point. Yeah, I get it. But 2025, we had an all-time high, and it was always in Q4. It's either in October, November, or December. And this time it was October 6th, 2025, 1 year after the halving. And what happens after the halving? We have massive, massive lows. And we lost 50% in 4 months from October 6th to February 6th, February 5th. And it went down, well, 49, 50%. Now, is this going to keep continuing on as a downward trajectory? It might not. I buy Bitcoin every single Monday using the Cash App. It just kind of rolls off as it does. And if I'm wrong and we don't see lower lows and we start to go up, well, great, I've been buying. But if it does what I think it's going to do, which is continue to go down for roughly either 300, and I can tell you that as far as time frame goes, it's always like the first one was 411 days from the all-time high to the all-time low. 2017 to 2021 is 365 days. And 2021 to 2020, well, whenever we see it, 366 days. So I think that if we keep going down, then I have some dry powder on the side. That's why I like the whole real estate play, because it gives me a nice little revenue stream. And then as we start to go down and down and down, if we do, then I have a big chunk of cash I can put into it. And if I don't, well, that's why I dollar cost average every Monday. So at least I got some upside.
Yeah, I really like that. So the 4 year cycle, not gonna lie, is quite weird. I'm also a believer for the cycle. It's just like really weird that we saw the top exactly 1,067 days from the cycle bottom to the cycle top. So that's what we saw on 6th of October 2025, like you mentioned. But something I just don't understand why people are just find it so offended, basically. They think the 4 year cycle is BS. But
Sure.
in my opinion, I think this is one of the very few indicators for us retail to kind of gauge where the market is going to get people find it so offensive. Like sometimes I just find it funny. I mean, for sure, I would love to see Bitcoin to break the 4 year cycle. That means institutions guys, the big money guys are here, non-stop going up Bitcoin. I mean, of course, I would want to see that as well. But like, I would say it's still a good indicator for us to gauge where the market possibly go to, in my opinion. But like you mentioned something interesting. So you do DCA regularly on Monday. So is your strategy for Bitcoin is just keep buying? Like, is at what point would you consider selling your Bitcoin?
Well, first of all, let me go back real quick to talk about the 4 year cycle, because it sounds ridiculous, and it is ridiculous. I mean, in some ways it is, but you have to understand that however Satoshi Nakamoto figured it out for those down lows, every big huge dump of Bitcoin always happens in what we have here in America is the midterm election years. So we have a president election every 4 years. And we have a midterm election, which nominates Congress and gets either congressmen, congresswomen, senators into office. So what every midterm election year always falls on 1 year after the all-time high. And 2026 is a midterm election year. And 2022 was a midterm election year. And 2018, and so on and so forth. So when you have those midterm years, why is that so important? So yeah, we talk about the halving, but also maybe it's just as simple as the markets don't like ambiguity. They don't really know what's happening. And especially if you don't have America and their direction of which way they're actually going. And if you get more politicians that are left-leaning or right-leaning, it could affect the economy massively. So because of that, and there's a statistic that since 1954, if you bought on the midterm election day, which is usually the first Tuesday of October or November, excuse me, and you bought that day, within 7 months, you are, historically speaking, up 15.8%. So I just think it's one of those things where it's like, okay, you have the halving, but you also have this big geopolitical event, which is the midterm elections, and it screws up the whole market. So then for your next question, which is as far as like with DCA and when I would actually sell Bitcoin, I'm not Michael Saylor. And Michael Saylor believes that you should never buy it, even though he talked about net zero and things like that. I believe that you should sell some Bitcoin along the way, but you can never ever get out of crypto because they're going to keep debasing the currency. So I look at Bitcoin and say, okay, if we're still living the 4-year cycles, and if you want to take a look at like something as easy as like moving averages, the 200-day, 250-day moving average, and the 50-day, you can make it pretty simple like that and go, okay, well, if I'm going to buy along the way, maybe I take a look at these averages and just start to sell as they go above my minimal price, and I can sell off. Or what I use is there's also one called over at Ben Cowan's website in the cryptoverse, and we just take a look at risk levels. And as those risk levels, as the price goes down, the risk levels go down. And as the price goes up, the risk levels go up. So anything below 0.5, I'm buying. And then if it gets below like 0.4, 0.3, 0.2, I actually double or quadruple the amount of Bitcoin I buy. And then when it goes above 0.6, which means the price is going up, I start to sell. I ladder in and ladder out. So I sell at 0.6, a little bit at 0.7, a little bit at 0.8, and so on and so forth. Now, that sounds great, but I'll be honest with you, sometimes even I, who've been around since 2017, look at the market and go, it can go higher. It can go higher, and you get greedy. And if you don't have a
We're all
plan,
humans at the end of the day.
exactly. And if you don't have a plan and don't stick to that plan, you're going to get burnt. And that's what happened to me this last cycle. I sold, I did decent, but I could have done way better. And I'm going to fix that, hopefully, this round.
So speaking of sticking to the straight rules when it comes to investing, I'm not sure if you use any trading bots or AI, because like AI is getting such a becoming such a big thing. And yesterday I was actually covering the news on Roxham TV. So there is this Claude engineer built this trading bot, and he managed to turn $200 into $14,000, and using really strict rules, basically tracking the whales on Polymarket. So point being, what I'm trying to say is that there are evidence that AI is entering not only our daily lives, your choice of LLMs, I don't know, ChatGPT or Claude, but point being, it's not just a large language model, but also actual trading. So I'm not sure if you come across any AI tools when it comes to trading that you find helpful, or maybe we're not at that current point right now.
Well, I will say this, besides Benzel indicators, I've been on Tex. He's got this thing called Bull Mania. And it's, I don't know if he used LLMs or how he did it, but he was one of the few that actually called near the top. And as we hit the top in October, I think it was in November, he said, hey, look, this trend, he calls the money line, is now at this point. And if you've already laddered in, time to ladder out. And I was like, man, that makes a lot of sense. So for Ivan on Tech, shout out to him for that one. Now, as far as like with AI, I've seen a lot of those. I've seen a lot of the segments in YouTube videos, X, TikToks, where they're like, I use this bot, I made this much. And I'm always wondering if this is just some type of farm engagement or if they really did hit those numbers. And the next thing I think about is if they did hit those numbers, that's great, but that's one trade in a line of a lot of trades. So I wonder how accurate that actually is. So for me in trading, I'll tell you what I know, I'll tell you what I don't know. That's not my forte. But I will tell you about for AI, I think it'll be the biggest sector. And for me, I've used ChatGPT, I've used Gemini AI, I've used Perplexity, I've used Grok. And I have to tell you some of the best things that I've done so far. And I've actually, this in January, I installed ClaudeBot or OpenClaude on my Mac Mini, and it was a disaster. I do not like using that whatsoever. And I tried it for like 3 weeks. I just could not get it. I came back to it last month, tried it again, still can't really get it. But when I went to Claude Cowork and used that, I've been using it now for 3 weeks. It is the best and easiest thing I could possibly do. And here's an example. So I live in Puerto Rico. I work with an animal shelter, and they do great things. The problem is that their funding is low, and their website looks like it came from 1997. I said, hey, I'm going to build you guys a website. I use it with Claude Cowork, or actually Gemini and Claude Cowork. and I got everything to work right. And it's a nice updated website. And now they can take donations and they can use either crypto or PayPal or Venmo or this one called Ate, which is in Puerto Rico. And then I actually put in an AI agent inside the website. So when people go there, they can ask it any question about any dog that they want to adopt or not adopt or foster. And it gives them a real feedback as a voice. So I've done things with that. It's also worked out great for my show. Is now I have and here's the thing, people think that AI is going to take all their jobs. I'm old enough to remember before the internet. That's how old I am. And that was supposed to take everybody's job as well. So here's an example. Like I have a researcher and he sends me great information every single day. I'm not going to fire him because I can use AI and make it all kind of automated. What I tell is I go, I need you to send this to a Google Doc. The Google Doc is actually, and I need you to make your own decisions about what is the most important thing since he's been in crypto as long as I have. He gives me the most important interviews, the most important links, the most important stories of the day. I have Claude Cowork go in, it ranks all those things, it segments them into what it thinks is the top ones. It gives me a title and it gives me a thumbnail. So I use both. E gives me that human element, which I think we should never lose. And Claude AI makes my job a hell of a lot easier. It takes me, instead of 3 hours to disseminate and put everything together, to 30 minutes. And that, I think, is where we're gonna move. Now, there's gonna be some different jobs are gonna go away. I mean, you're not gonna find, if you were a typewriter repair person back in the 70s and 80s, that job's gone. But of course, there was other jobs that were created. You can be computer repair, you can be SEO, you can be advertising, all that stuff. So I still think that AI is not the doomsday everybody thinks it is.
Now I feel really intrigued to know more about co-work because, like, for
Right.
Hong Kong or maybe in Asia, there was such a wave when OpenClaw came out.
Mhm.
So there was this campaign in China, pushed by Alibaba, basically the big tech in China, and telling people a little bit propaganda, like not gonna lie. So like they're telling people OpenClaw is the biggest thing, and what is happening in Shenzhen in China is that people would bring their laptop and then they would queue outside the event and ask people to set up OpenClaw for them. So I haven't really tested out OpenClaw myself, but the feedback that I received from my friends, my inner circle who try that out, is that it's extremely complicated. But for co-work, the AI tool you mentioned, what is the setup process? Like, do you need any coding knowledge? How does it work?
No. So if you want to find some good information, there is Sabrina Ramanoff, and she is on YouTube, and she gives great little segments of like how to set everything up. And the big thing is when I set up OpenClaw, there was a command line interface, a CLI, and you would go through that, and you would make, and it was supposed to be easy. And there was a guy also watching, Alex Finn, and he would like call you a moron essentially if you couldn't figure it out. I'm a moron. So like I would do it, but then things would break. And then there would be an update, and I would update it, and things would break. And then there was files that wouldn't get found. And then all of a sudden, like all the tokens that I was integrating it, because you can use Anthropic, you can use ChatGPT or any kind of API to call in for the compute. And before I know it, I'm like, where'd all my tokens go? Damn it, this is just taking way too much. It was because cron jobs and Heartbeat and a bunch of BS people don't need to know. So the easiest way is just go to Claude.ai and then get the desktop version. And again, I can only do so much. If I can do it, anybody can do it. You download it, and then it starts to. And once you fire it up, it's like, it's not a command line interface. It's actual app on your computer. The big thing you're going to do, again, watch Sabrina Romanoff's video where it's like 10 minutes. She says, before you set everything up, tell it about yourself. Tell what your goals are. Tell about what you want to do. Tell about the things that interest you and don't interest you. And for me, it was a big, long it took like 15, 20 minutes. I told Claude exactly what I want to do. There's 4 different sectors I want to work on. One of those was my real estate properties and SEO purposes. One was the animal shelter to get them grants. The other one was for Airbnbs and my different properties. And another one is I want to help another person who does complementary health, which deals with PRP, stem cells, and ozone therapy. And I said, I want to do these things. now make me essentially a bot for each one. And then it would say, like, hey, we can do that, but we need to break it down even further. And we just go and go and go. And before you knew it, like I had 9 different agents working in different sectors for each of those 4 tasks. And then when I would do it, so like with digital asset news, I have the one that does the daily show, but I also have the one that is my CPA. And that bot goes through all of my P&Ls, profit and losses, and my emails to take a look at any kind of receipts for my revenue and any kind of valuations. So then I would go that and I can send to my CPA. I know it's getting a little bit more complex, but it's easy once you set it up. Just tell it what you want it to do and it will do it. There's going to be some learning curves like everything. But I think for me, and I've done Hermes, I've done OpenClaw, and this one is by far the easiest way to do it. And it cost me $20 a month. Can't beat it.
Definitely worth the money. You know what? I'm gonna try out after this. This live stream, probably gonna try out tomorrow. And yeah, I'm very excited because like right now, even for YouTube, I'm still doing all the process. I'm using our like the thumbnails that you're seeing is of course like AI generated. Of course, that helped me a lot already. But like learning what you told me about co-work sounds like it's a lifesaver. Well, the last topic I want to touch upon before we end this stream is that like you talk about quantum computing a little bit. Like, are you concerned about quantum computing? Do you think it's going to be a really big threat to Bitcoin, or more for the traditional financial systems, in your opinion?
I don't know. But it seems like there's one side that says it's going to destroy everything, and there's another side that says we got plenty of time. And I will tell you, this will go back to the 4-year cycles, because everybody now is saying that it doesn't matter the metrics that you're looking at, if that is Google or any type of government chart, it's looking that 2030 is when these quantum computers are going to be able to actually do the things that they're supposed to do. And it's not just about these physical qubits, there's the other parts of qubits. And they said at that point of 2030 is when we'll be able to break the code that is Bitcoin. And I thought to myself, I'm like, wow, that works out pretty well, because we have a halving in 2028, and then we usually have a all-time high the year after that. And then the year after that, which would be 2030, is our massive low. So to answer your question about, is quantum computing going to break Bitcoin and everything else? Well, as a reminder, quantum computing, we got more problems if it actually gets put up, and people aren't just going to attack Bitcoin. It's going to be everything else. And I had a friend on the show, Jerry. He said if quantum computing comes in and can attack Bitcoin and break it open, as far as like the old wallets, like the Satoshi era ones, you can also look at it as maybe you can also defend on that same prospect. And it can actually defend those types of wallets. I'm like, I don't know if that's what it's going to be, but if it takes till 2030 to get there, at least we got a lot of time, and hopefully people take profits along the way.
Yeah, I mean that's a good perspective for sure. I've never really thought of that way, but like it kind of makes sense now you said it. So credit to your friend Jerry. But we are towards the end of the segment. Rob, thank you so much for taking the time to join us today. Honestly, a fantastic conversation. Like we cover so much from the Bitcoin cycles. We talk about like wealth management, AI risk, and where the future of money might be heading. So if you guys haven't already, definitely go check out Digital Asset News on YouTube, which is one of the most consistent and insightful crypto channels out there. And I genuinely the one that I watch on a regular basis as well. So Rob, really appreciate your time and your insight today. Hope to have you back on Roxham TV again soon.
Thanks, everybody. Thanks, Jimmy.
All right, I think we are out.
Okay.
How did you feel?
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?